welcome to RTP discussion session of CA Inter Costing. Myself, Dr. Yogesh Patil. Warm welcoming to all of you. On behalf of JK Shah classes, and in this session, we are going to revise each and every question which is covered in RTP. Now, if you have referred the RTP which is issued by ICAI for November 22, the questions and the level of questions which they have covered in this RTP is amazing. Like very small and minor points they tried to cover. So my personal advice to all of you, please revise each and every question of RTP before appearing for examination. So let's start with the discussion of RTP. Total 15 questions are covered in RTP, and out of 15 questions, last question, that is question number 15, is based on theory, but remaining 14 questions are based on practical calculations. Now, as far as question number 1 of RTP is concerned, if you observe this question, you will notice each and every concept from the chapter material costing, concept related to EOQ calculation, concept related to various stock level calculation like ROL, reorder level, maximum level, minimum level, average level of stock. Each and every calculation has been covered here, and very small and important points are there. Let's discuss this question which is related to the material costing. Question number 1 says that Messrs Tanishka Materials Private Limited produces a product which names ESS. ESS is the name of the final product which is produced by this particular company. The consumption of raw material for the production of ESS is given. That means for making ESS 1 unit, the material which is been consumed by the company is covered in this information is 210 kgs and 350 kgs per week. If you observe this is nothing but consumption related information, but this consumption related information is given on weekly basis. So two types of consumptions are given in the question. Consumption type number 1, 210 kgs is my minimum consumption per week, and 350 kgs is my maximum consumption per week. If you want to calculate average consumption per week, then it is quite simple. You should take the basic and simple average of both the figures, that is calculated as 210 plus 350 divided by 2. Your average consumption per week is 280. Correct? This is your weekly consumption. But if you check the next line which is given for other information, the very first information which is given in other point is procurement time. Procurement time is given in 5 to 9 days. Now, what is the meaning of procurement time? In other words and in simple words, procurement time is a delivery period. It is also called as lead time. So 5 days is the minimum lead time and 9 days is the maximum lead time. If you want to calculate the average lead time, again you need to calculate the simple average. 5 plus 9 divided by 2 is equals to 7, and 7 days is your average lead time. But if you check the given consumption and the given lead time, they are not at parallel level. Your consumption is given on weekly basis and procurement time is given on daily basis. So you can do one thing, the given consumption, weekly consumption, you can convert into per day basis. Now, how to convert weekly consumption on per day basis? So weekly consumption is to be divided by 7 days a week to get the daily consumption. So simply 210 divided by 7, your minimum consumption will become 30 kgs per day. Maximum consumption per week is 350. This is the consumption for 7 days. When you divide it by 7 days, you are going to get your maximum consumption of 50 kgs per day, and 280 divided by 7 will give you 40 kgs per day. So I have just converted my weekly consumption on daily basis because lead time is provided in days basis. Ordering cost per order is given. Ordering cost is your single order cost. Whenever you are placing single order, in that case 200 is the ordering cost, and before that purchase price is also given. This is the rate per kg of your material. The given information related to storage is very important. Your storage cost is 1% per month. This cost is given on monthly basis. So simply if you want to calculate your carrying cost on annual basis, your annual carrying cost would be 12%. It is annual carrying cost, sir. How you converted that 1% into 12%? Because it is given on monthly basis, and in 1 year, 12 months are there. So for entire year, 12% is your carrying cost proportion. In addition to this, question itself suggests that it includes plus 2 rupees per unit per annum, means whatever 12% amount you will be calculating, in that you should add 2. Now, sometimes question comes like this: when carrying cost they gives you in percentage form. Whenever it is given in percentage form, make it sure that you are going to convert this percentage into amount by charging this carrying cost on rate per kg, that is purchase price per kg. Now, purchase price per kg is 100. That means for maintaining a stock of rupees 100 kgs of raw material, approximately 12% carrying cost you are incurring. So in short, 100 rupees into 12% is equal to 12, and in that 12, when you add these 2 rupees, your total carrying cost per kg per annum would become 14 rupees. So this one is the hidden calculation again, 12 rupees and 2 rupees, total addition is 14 rupees per kg per annum. By using the same information, what all things are asked in the question? Point number 1, question is asking us to calculate various things, where very first thing which is asked is your economic order quantity. Hope you remember the formula to calculate economic order quantity. Your economic order quantity is computed by using the formula of square root of 2 into annual requirement of material into ordering cost divided by carrying cost per unit per annum. Now, whenever you people are calculating EOQ, for that purpose 3 things are required. Very first thing which is required is annual consumption of raw material, annual purchases of raw material, annual requirement of raw material, and annual requirement of raw material is not given anywhere in the question. Whenever annual requirement of raw material is not directly given in the question, in that case you should compute it. Sir, how to calculate your annual consumption? Now, consumption on an average 40 kgs of material you are consuming on per day basis, 40 kgs per day, and in a year total 365 days are there. So when you multiply this 40 into 365, you will be getting your annual consumption, which is equal to 14,600, correct? 14,600, my annual consumption is now readily available with me. Further multiplication is O, that is your ordering cost. Ordering cost is mentioned in the question. Your ordering cost per order is 200, and carrying cost just now we computed, which was rupees 14. So this calculation is very simple. It's a root of 2 multiplied by 14,600 multiplied by ordering cost 200 divided by your carrying cost, which is 14 rupees. This will give you EOQ's answer, which is very, very simple. See here. In suggested answer also, they have computed very first thing, and the first thing which is computed is your maximum consumption per day. The same thing we have already done while discussing the sum only. Minimum consumption is also calculated, average consumption is also calculated, and this average consumption, when you multiply by 365 days, you are going to get the annual requirement of material, which was 14,600 kgs, and the same 14,600 kgs is taken in their solution. When you solve this, you are going to get one fractional figure on your calc. They have taken the rounded off figure, because whenever you are going to purchase the material generally is purchased on rounded off figures. Now, exact quantity we purchase, we always prefer to purchase exact quantity, and that's why they have rounded off it to 646 kgs. This is the EOQ's calculation. So point number 1 was very simple, and that is done. Only important and hidden point while calculating EOQ is the computation of A, and A's computation is in front of you. Point number B is reorder level. Students, whenever you are calculating reorder level, for this purpose, very first you should consider the maximum consumption, and this maximum consumption you should multiply it with the maximum lead time, and luckily both the things are available with us. Your maximum consumption is 50 kgs per day, and maximum lead time is 9 days. As safety stock is not given anywhere in the question, we need not to write safety stock, and if you are recording also, then amount is not available. So it is simply 50 multiplied by 9, 450 is your answer. You can check this answer in the suggested solution. Your reorder level is 450 kgs. They have also used the maximum consumption into maximum procurement time formula. Point number C is asking us to calculate your maximum stock level. Whenever you are calculating maximum stock level, for that purpose, very first you should add ROL and ROQ. Sir, what is ROL? It is reorder level. Plus ROQ is reorder quantity. Sir, what is the meaning of reorder quantity? Under normal circumstances, reorder quantity is your economic order quantity. It's an order quantity whichever company is following for placing second and subsequent orders. From this calculation, you should deduct the minimum consumption, and this minimum consumption is to be multiplied with the minimum lead time, totally formula based chapter, and these formulas are already discussed in the class lectures. So ROL plus ROQ is the requirement. ROL just now we computed, which was 450 kgs. ROQ also we computed 646. So this is 450. ROQ is your EOQ, which is 646. This will give you total available stock in your godown. From that, you should deduct the minimum consumption in the minimum lead time. Your minimum consumption is 30 kgs and minimum lead time is 5 days. So in this bracket, you need to multiply 30 and 5. Ultimately, by solving this equation, you are going to get your answer. This one is first total, this one is second calculation, and your answer for this question is 946. So maximum stock level is also calculated. Only you need to put the formula and you need to substitute the amount in that formula. Point number next is asking us to calculate the minimum stock level. Guys, whenever you are calculating minimum stock level, no, formula to calculate that is ROL, which is already available with us, and ROL was 450. From ROL, average consumption into average lead time computation is to be deducted. My ROL is 450. This is recorded here. From that average consumption, we have already computed in the first working note when we converted that weekly consumption into daily base. In that particular calculation, only we've computed this 40 kgs, and it is further multiplied with 7 days. That is the average lead time, average procurement period, average delivery period. This will give you minimum stock level. The easiest calculation and easiest formula based sum. But only one hidden point was there, annual consumption. That was not available directly with us, and that is why we have computed that by considering your average consumption into 365 days. Correct? If you check the next calculation, next point which is covered in this RTP is the computation of average stock level. It becomes very easier when you have maximum and minimum answers available with you. In point number C and point number D, we have computed maximum and minimum answer. Only you need to add both the answers, and for simple average, you should divide that total by 2. You are going to get the answer of your average stock level. And finally, the last simple computation point is number of orders to be placed. Whenever guys you are calculating number of orders to be placed, you should use the formula of annual requirement of material. Whatever material requirement is there on per annum basis, that is to be divided by using number of units or kgs, quantity, whatever quantity you are ordering in one order, that we are dividing. According to our calculation, annual requirement of material was 14,600, and our EOQ says in each order you must purchase 646 kgs to minimize the ordering cost and carrying cost. This is the meaning of your EOQ right now. 14,600 divided by 646 will give you number of orders, but again you are going to get the fractional number of orders, something like this 22.60. If you check the suggested answer, they have also calculated the same by using the formula, but if you check the number of orders, they have rounded off. Whenever you are rounding off the answers, in that case, there will be fractional difference in your calculation of total amounts. Okay, be careful with this. You are having both the options. Either you can go for the fractional calculation, or you can take the full calculation, that is rounded off answer, to get the exact values. Now, if you check the next point, point number G is asking us to calculate the total inventory cost. Whenever question asks us to calculate total inventory cost, it means it is asking us to calculate the total purchasing cost, total ordering cost, as well as total carrying cost. Material cost, inventory cost always includes 3 types of cost: purchasing, ordering, and carrying. Now question comes, sir, how to calculate purchasing cost? Purchasing cost is annual requirement of material into rate. Our annual requirement of material is 14,600 and the rate which is given in the question is 100 rupees. There is no discount covered anywhere in the question. That's why 14,600 into 100, your purchasing cost will become 14,60,000 rupees. Please check this suggested answer. They have given you 14,60,000 rupees. This is the final cost which you have computed, but it is only related to purchasing of material. Now, second cost comes ordering cost. If you want to calculate ordering cost, for that purpose, you should compute first number of orders and per order cost is available. My per order cost is 200 rupees. Sir, where it is given? It is absolutely clearly given in the beginning of the question. See, ordering cost per order. So each order costs you 200 rupees, and if you want to calculate the number of orders which are already been computed in point number F, number of orders are 22.6, which we rounded off to 23. So 23 order and each order cost you 200. 23 into 200 is equal to 4,600. See, the second answer is also given. And if you want to calculate the last cost, which is called as carrying cost of inventory, in that case, you should consider the average inventory first, and average inventory is computed by using the formula of Q divided by 2. That is the quantity which you are ordering. Now, throughout the period, throughout the year, the same quantity won't be there in your go down. That's why we are using the average basis. Average is quantity divided by 2 multiplied by 14 rupees. So, from where you got this 14 rupees? 14 rupees is computed by us only while computing and discussing the storage cost. So, storage cost is 14 rupees. Each order contains quantity of 646 kgs. You should divide it by 2, and then whenever you are going to multiply it by 14, you will be getting your carrying cost. And see here, carrying cost is computed 4522. These costs are not coming same because you have rounded off the orders. If you are not rounding off the orders, in that case, you will be getting the exact figure. If you are taking the full fraction, in that case, simply you need to add up all three calculations: purchasing cost, ordering cost, and your carrying cost. Ultimately, you are going to get finally total inventory related cost. So point number G is also done. If you check the next point of the question, next point says H. There is one proposal available with this company. There is one offer available for this company. If the supplier is willing to offer 1% discount, obviously because of discount, your purchasing cost will reduce by 1%. So if supplier is willing to offer 1% discount on purchase of total annual quantity in 2 orders, what is the condition? If you want to avail discount of 1%, you should purchase the entire quantity, whatever is the annual requirement, you should purchase that only by placing 2 orders. According to EOQ model, we are currently placing 23 orders, but supplier approached you and he is asking you to reduce the number of order and is asking you to purchase the bulk quantity. Not entirely 14,600, 7,300, 7,300. If you are going to place 2 orders, in that case, you will be availing the discount of 1% on your purchase price. Question is asking us whether offer is acceptable. Now, just we need to compute the EOQ related cost. Just now we computed, and that entire cost we should compare with proposal cost. Sir, what will be the proposal cost? For calculation of proposal cost, very first you should apply the 1% discount on your purchase price. Correct, no? Now, purchase price was 100 rupees under normal circumstances, but when you deduct 1% from this, you are going to get the revised purchase price, and your offer price in this case is 99 rupees. Total quantity which you are purchasing from the supplier is 14,600 only. Whatever is the lot size, if you are purchasing all 14,600 kgs together, or 7,300 twice a year, or any other quantity also, annually you are going to purchase 14,600 only, but now you will be purchasing this quantity at 99 rupees, and that is why there is a reduction in the total purchasing cost, which was previously 14,60,000, and now because of that 1% discount, this cost got reduced to 14,45,400 only. Correct? Now, whenever you are computing, ordering cost, question specifically says you are placing 2 orders and each order costs you 200. That's why 400 rupees is the total ordering cost. It is quite simple. Now, very important point of this question is the computation of carrying cost. Majority student commits mistakes here. Now, if you are calculating the carrying cost, first you should take the average inventory. Average inventory, sir, how to calculate average inventory? Now, we are not following EOQ. The given option is to place two order and 14,600 kgs. If you are dividing in two parts, in two orders, so each order will carry 7,200 kgs of raw material, correct? So 7,000 kgs of raw material you are storing in your godown. You should take average of the quantity which you have ordered, which is available and which is lying in your godown. 7,300 divided by 2 is equal to 3650 kgs, which is to be multiplied with the revised carrying cost. And here is the important point number 2. Now, student generally takes the carrying cost which is computed by us in the initial stage, and our carrying cost was 14 rupees. Now, if you are taking 14 rupees carrying cost, now students, tell me one thing, this carrying cost we have computed at a rate of 12% on the original purchase price of 100. Now, purchase price has changed. Now, purchase price is not 100. Now, purchase price is 99. So, you should calculate 99 into 12%. That will give you 11.88. And in that 11.88, when you add this 2 rupees per unit figure, your revised carrying cost will become 13.88. You can check here, 13.88. Hope you got it, how to calculate it. It is computed by considering 12% on rupees 99, and in that 2 rupees flat cost, storage cost is added, and this is how 13.88 is computed. So total calculation is 50,662, and this is something called as total cost. What was the EOQ's cost? EOQ's cost was 14,69,122. But your proposal's cost is 14,96,462. Even after getting discount, your proposal cost is higher than the EOQ. So obviously, proposal is not to be accepted, and the same advice has been written here. As total inventory cost at offer price is 27,340, which is higher cost. I have compared both the cost. I have compared my proposal's cost with the EOQ's cost, and the difference is recorded here. It is higher, and that's why proposal should not be accepted. And here is the calculation end of your second last point. Now only one point is pending, and that is point number I, which is very, very important point. Please concentrate. If the answer is no, obviously we have already advised the company that proposal should not be accepted. If the answer is no, what should be the counter offer? Sir, what is counter offer? Counter offer with respect to percentage of discount. We need to calculate what percent of discount we should offer. Right now, whenever you are purchasing something from your seller, from your supplier, in that case, you are going to bargain, you are going to negotiate the price. So, what discount percent is to be negotiated is asked in point number I, and that is why in entire question, this is your third important point. Sir, which was the first important point? Calculation of annual requirement of material. Second important point, change in the carrying cost for H point calculation. And last important point is computation of percentage. Now, try and understand. How much discount is to be asked for, how much discount is to be negotiated for is not available. We need to calculate a discount, and if you check the suggested answer, they have assumed the discount rate as X. Correct? Now, if you are assuming discount rate as X or Z or Y or A or B or C, anything you can assume, they have assumed discount rate as Z%. Now, counter offer price will be original price minus discount, that is 100 minus X%. Correct? No? Now, when your offer price changes, when your purchase price changes, when your rate changes, obviously your carrying cost will change. Sir, how to calculate carrying cost? Carrying cost is equal to purchase price, which is 100 minus Z or minus X, whatever thing you are assuming is correct. Now, on this particular purchase price, you are going to charge 12%, and in that you will be adding 2 rupees straightforward. Correct? No? That is purchase price, 100 rupees or 99 rupees or any revised purchase price, you should multiply by 12% storage cost, and in that you should add 2. So, if you solve this equation, ultimately you are going to get this as 14 original your cost of storage minus 0.12x or 12z. Correct? Done? Now, once this is calculated, you need to calculate the total inventory cost. Inventory cost will be original inventory cost 14,60,000 minus discount. Discount is 14,600 X. Obviously, we have computed the discount margin. We have recorded the discount margin. It is X%, and X% is to be deducted from the entire quantity, entire value, entire price of the material. If you are calculating the ordering cost, there is absolutely no change in the ordering cost. 2 orders we are placing at the rate of 200. It will cost you 400. It will remain constant always, but there will be change in your carrying cost. For the purpose of calculating carrying cost, first you should calculate the average inventory by taking per order inventory divided by 2, and it is to be multiplied with C. Now your C we have already ascertained by assuming some percentage, and this C is replaced here. Now when you solve this entire equation, you are going to get something like this, and when this particular calculation is been solved, ultimately you will be getting the discount margin, and discount margin is 2.82%. Sir, explain it for one more time, sir. It is little difficult, sir. Now try and understand. My EOQ's total cost is available. Now EOQ's total cost, according to our calculation in point number H, when we calculated EOQ cost, that one was 14,69,122, correct? So same thing I am recording here. It is 14,69,122. Now, if you want to calculate a discount margin, in that case, we assume discount is equal to X%, correct? This is the first assumption. Because of this, your revised purchase price or rate per kg of raw material will become original purchase price 100 minus X%. And when you perform this calculation on your Calc, 100 minus X% is your obviously 100 minus X only. No, X is your discount. Okay. So this will become 100 minus X. Because of change in purchase price, your carrying cost will change. Your carrying cost will be 12% of rate, and in that you should add 2 rupees. So it will be 12% of rate. Your rate is 100 minus X, and in this you should add 2. When you solve this, whenever you are going to solve this, you will be getting 12 minus 0.12X plus 2. So this will become 14 minus 0.12X, and the same carrying cost is been given in the question. You can check now how this calculation took place, right? So this one is given in the question. Carrying cost is computed. It is 14 minus 0.12X. 14 minus 0.12X is computed. Once this is done, next computation is your TPC. Your TPC will be quantity, that is annual requirement into rate. My annual requirement is 14,600 kgs of raw material, and my revised rate is 100 minus discount. So it will become 14,60,000. This is 14,60,000. The same amount is recorded here, 14,60,000, and this discount you should calculate now, and discount calculation is quite simple. It is now again multiplication is needed, minus 14,600X. Simple calculation. I am just preparing simple equations. One TPC is calculated. Next comes TCO, that is your total ordering cost, and your ordering cost is number of orders, that is 2 orders, multiplied by CO. We are going to place 2 orders. Each order cost us 200. So this will cost you rupees 400. Done, correct? And finally, if you are calculating inventory carrying cost is average inventory multiplied by carrying cost. I am placing order containing 7,300 kgs of raw material. I am dividing it by 2. When you multiply it by CI is computed. Our revised CI is 14 minus 0.12X. You just need to solve this. 7,300 divided by 2 is 3650 into 14 minus 0.12X. You just need to solve this. Now when you solve this, you are going to get 51,100 minus 438X. This is my carrying cost, this one is my ordering cost, and this is my total purchasing cost. See, same equations are given here. 15, 11,500, 15038Z. In short, what you need to do, you know. Now, if you are calculating total cost equals to purchasing cost. My purchasing cost is 14,60,000 minus 14600X discount. In that my ordering cost I am adding, and in that my carrying cost I will be adding, so that I will be calculating my total thing. Now when you solve this, 14,60,000 plus 400 plus 51,100, you are going to get 15,11,500 minus 14,600 plus 438 is equal to 150 and 38x. This is something called as total cost when EOQ is not followed. Now, when you simultaneously solve this or compare this with the EOQ's cost, your EOQ's cost was 14,69,122. Means by following EOQ, if entire purchasing cost you 14,69,122, so the difference between these two values should be asked for the discount, no? Now, if you calculate the difference between these two values, so this will become 15038x equals to 146,922 minus 15,11,500 is equal to 42,378. Only you need to find out the value of x. When you divide it by the available value, you are going to get 2.82 value of x. So this much discount is to be asked for, at least. If supplier is offering you 3% discount, you should accept the proposal. If supplier offers you 5% discount, you should accept the proposal. But if supplier offers you less than 2.82% discount, then offer is not to be accepted. And this is the entire discussion of your question number 1, which was very, very important. Now, if you check the second question of this RTP, that is from your important chapter of employee costing, labor costing. How to solve that question? What has been asked? Let's read the question number 2. Employee cost, question number 2, HR Limited is progressing in its legal industry. Legal industry is covered. One of its trainee executive, Mr. H, in the personal department, HR department, has calculated labor turnover rate of 24.92% for the last year using flux method. There are 3 methods, no? Replacement method, separation method and flux method. He has used flux method and he computed 24.92% flux rate, labor turnover rate. Now, we all are expert of costing. That's why now company has approached us and they are asking us to cross-verify the rate which is computed by the trainee executive. Following is the data provided by the personal department for the last year. Data has been given. Data covers employees category, number of employees at the beginning of the year, number of employees totally joined. When question says number of employee joined, it silently says joined includes new recruits as well as replacements also. Correct, no? 2 types of joinees are there. First type of joinee is a fresh employee who has joined your company, your organization, your factory as a fresher without replacing anyone. But because of exits took place during the year, if someone is coming on that particular designation, that will be termed as replacement. So joined includes 2 important points. First is new and second one is the replacement. Left employees are given, workers at the end of the year are given, and various categories with numbers are available in this question. If you check here, 2 additional subtables are given. This says that employee transferred from subsidiary company. Your company is the holding company. You are having one subsidiary company. From subsidiary company, some employees are coming to your company, and if employees are coming to your company, they will be treated as a joint employee. So what I am doing? I am cancelling this 12 which is related to senior staff attorney and senior staff attorney join column. I will be recording this 12 data. So here I have recorded senior staff attorney 12. Now you can cross verify. In the beginning 6 employees were there, 12 joined, and that is why 18 employees are there at the last end of the year. Now, if you check the same thing, senior records clerk 39 have joined. They are not fresh, they are not new, they are coming from subsidiary, but they are coming to us, no? So we will be treating them as joined. I am cancelling this from the second table. I am just merging my second table with the first table. So same amount I will be recording here, 39. Initially 12 employees were there on the post of senior record clerk. I joined 39 during the year, total 51 employees at the end of the year available. One more table is given, absolutely no need of recording them separately. Now this is the employees transferred to subsidiary company. During the given period, some employees have joined and some employees are now going to the subsidiary company from your holding company. They are going. So this event can be treated as equivalent to left event. So if you check, the numbers are given in the left column only. See, no, left column, and they have given you 90 and 15. So litigation attorney and associated attorney. Now, two types of employees I am cancelling from here. Litigation attorney, total 90 left, done, and associate attorney, total 15 left. So this calculation I have recorded, and in short, I have minimized my calculation by merging up entire table. The two separate parts which were given in the question, I have merged with my first table. At the beginning of the year, there were total 1158 employees on the payroll of the company. So entire beginning strength is available. The opening strength of the legal secretary, staff attorney and associate attorney were in the ratio of 3:3:2. Beginning strength is given, and this is the beginning strength for legal secretary. See here, your legal secretary means this part. Second one is your staff attorney means this one, and last one is your associate attorney is also there. If you check, their beginning numbers are not given, but they have given you one assistance, they have given you one simple ratio between them, 3:3:2. So we are going to calculate them in the proportion of 3:3:2. Out of this 3, if any one number comes, no, easily remaining numbers can be computed. Easy. The company has decided to eliminate the post of litigation attorney. Litigation attorney post has been abandoned, that is eliminated. That means no more employee will be working on this particular post at the end of the year. So litigation attorney, I am going to my calculation, and at the end of the year, I am recording there 0. Why I have put 0 there? Because this post is no more, it is cancelled by the company. So all the workers, all the employees working on this particular post as a litigation attorney have left the organization, or you have removed them, or you have asked them to join your subsidiary company, and you have cancelled this post from the holding company. Next point says that the company and its subsidiary are maintaining separate sets of books of accounts and separate personnel department. They are having different accounting sets, they are having separate HR department, and that's why subsidiaries calculation we are performing separately and holding companies calculation we are performing separately. You are required to calculate the labor turnover rate by using replacement method, separation method, and we need to verify the answer which is computed by Mr. H. Trainee by flux method. So if you want to compute this, obviously replacement number is required, separation number is required. So instead of going for the suggested answer, see, they have given you lots of working note, they have given you lots of assumptions and all. So what I am trying to do, I am just trying to explain you this simple calculation by using this calculation part, this presentation. Statement showing number of workers I have drafted. Instead of using 5 columns, I have divided that join column which was given in the beginning, no? So this join column I have divided into 2 parts. If you check the question, they have given you joined employee together. This joined column I have divided into 2 parts. First is new and second one is the replacement. Now try and understand how I am presenting my solution. I have drafted everything. Record clerks related information is available. If you check the information which is given in the question, in the beginning, number of record clerks available with company were 810. So same thing, I have recorded 810. Out of 810, left workers are available 90. So total 90 workers have left the organization. If 90 workers, 90 employees have left the organization, maximum 90 replacement can take place. If less than 90 joinings are there, then less recruitments are there. But whenever more than 90 joinees are given the question, in that case, at least 90 replacement will take place. And if you check the number of workers joined, number of employees joined, 1620 employees joined during the year on this particular post. Out of them, 90 were recruited on the left employees position. So they will be considered as replacement, and therefore remaining 1530. Sir, how you computed this 90 and 1530? Total was given in the question. Total was 1620. Out of 1620, 90 left. No, so 90 got replaced and remaining joined as a new recruits. Correct? Now, when you take total of all these calculations, sir, how to take total of this calculation? Simply, we have bifurcated this data and we have recorded the numbers. whatever strength was there in the beginning of the year, that is to be added, left employees are to be deducted, replace employed has to be added, and new joined employees are to be added. 810 minus 90 plus 90 and plus 1530, you can cross verify the end employees number. It is 2340 and it has been given in the question, 2340. It is getting tallied. Easy. Second post is HRM. HRM is your human resource manager. Now, human resource manager, no information is available for the beginning. They have given you 90 left employees. So, left column I am recording 90, correct? Left I have recorded 90 workers, 90 employees. If 90 are left, you should check how many new employees have joined. Total joinees are 30. If total joinees are 30, means all 30 I'll be putting under replace case because it is not exceeding the 90s level. That's why there is no new recruit. And if you check at the end of the year's data says there were 60 employees on this particular post. So end data is available 60. Now we should go in a reverse way to calculate. 60 minus 30, signs will change, plus 90 will give you 120 HRM managers. Even you can check this in the suggested solution. They have given you the entire data and entire data says that beginning of the year 120 managers were there. So instead of going for so many of working notes, no, directly you can use this particular table to solve the calculation and data which was missing from the question. If you check third point, legal secretary, left is dash. Left is dash means nobody left your organization during the year. That means nobody replaced. If nobody has replaced, that means entire 90 employees who have joined the organization, they will be treated as new joinees. So all 90 I'll be recording under new. Again, beginning and end, both the values are not available with us. So I'm just keeping this information pending. I'm moving for the next calculation. Staff attorney. Staff attorney, left employees are available with us. They are 30. If 30 employees are left, first I'll be recording this 30 employees in left column. Please practice this question for one more time. The same question is there in JKSC textbook also. Now 30 employees left. If you check the joined employees are 30. 30 left, 30 joined. So all 30 will be considered as replacement, no new joinees. And if you check again, no final number is given in the question. No, it is not available. Now no calculation is possible. Associate attorney, again 15 employees left during the year. 15 employees left, but 30 employees joined. That means 15 replaced and 15 new joined, correct? And one more figure is available at the end of the year. If you check, 45 employees are available. If you go in a reverse order, then you must calculate this. 14,5 minus 15, again minus 15, plus 15. So beginning strength can be computed. It is 30. 30 employees, 15 left, 15 replaced and 15 new joined, and therefore 45 employees are there. Now if you check this particular strength of first 3 employees, they have given you legal, staff and associate attorney related one ratio. As per our discussion, this ratio is 3:3:2. So it is 3:3:2. You need to cross multiply. 30 into 3 divided by 2 is equals to 45. This will come 45. I just computed the ratio wise calculation. It is 3, 3 and 2. If 2 is 30, then 3 is how much? And again 3 is how much? This is what I have computed by cross multiplication. I have just cross multiplied the given data to get the answer. Now finally, we can calculate the missing balances of legal secretaries and staff attorneys. 45 were there at the beginning of the year, 90 people newly joined, so total 135 employees will be there at the end of the year, correct? 45 staff attorney employees were there in the beginning of the year. From those 45 employees, 30 left, 30 joined, so at the end again 45 employees will be there. So simple and the easiest presentation and the easiest calculation. Now 3 more calculations are pending, which we already discussed. 6 beginning, nobody left. 6 beginning, nobody left, nobody replaced, all newcomers I am going to record as a new joinee, and therefore there will be 18 employees, correct? Same is applicable for next calculation. 12 in the beginning, nobody left, nobody replaced. 39, transferred from your subsidiary company, there will be 51 employees at the end of the year. And litigation attorney only 90 left is given, because this company have removed this particular post, that's why 90 left. If 90 left, that means nobody replaced, and no newcomers. There were 90 employees, all 90 employees left. Now only you need to take the total of each and every column. It is 810 plus 120 plus 45 plus 45 plus 30 plus 6 plus 12 plus 90. It is 1158. My dear students, you can check this number is available with us. In the beginning of the year, there were only 1158 employees, and the same calculation we have performed by using this presentation. Now you can calculate even left number of workers, 90, 90, 30, 15 and 90, total 315 employees left during the year. How many employees replaced your existing post? 165. Then 1530 plus 90 plus 15 plus 12 plus 39 is 1686. 2340 plus 60 plus 135 plus 45 plus 45 plus 18 plus 51 is 2694. Each and every calculation we have performed, please use your calculator for revising this calculation. So we have computed beginning of the year, end of the year employees. Once this computation is done, we can calculate your average. Average is 1158, that is beginning workers, plus 2694 workers at the end, divided by 2. You are going to get 1926 employees average figure. Why calculation of average is required? Whatever method you are using separation method, replacement method, flux method, you have to divide each and every calculation by using average number of workers as far as separation is concerned. How many workers left your organization? 315. So 315 workers got separated out of 1926 workers in a year. So 315 divided by 1926, when you calculate percentage, you will be getting 16.36% approximately, rounded off figure, correct? If you are using replacement method, replacements are also calculated. Total replacement took place 165. 165 divided by 1926 into 100. 165 divided by 1926 percentage is equal to 8.57 approximately, or 56 approximately. And flux method gives effect of both the methods, total separated, total replaced, divided by average number of workers into 100. If you perform this calculation on your Calc, you are going to get one figure, and that is 24.92%. We have seen this amount somewhere, I guess. 24.92% we have seen somewhere. Sir, where it is given? In the first paragraph of the question. And the flux rate calculated by trainee executive Mr. H was correct. So it was correctly calculated, and this is something we have computed and shown here. So all the calculations are calculated. Now if you check, there is one alternative treatment which I would like to explain along with this illustration. If you consider only replacements and separation, only replacement and separation, in that case your answer will get tally, correct? But if you consider new recruitments also for your calculation, then alternatively you are going to get answer of 112.46. and in this event, if new recruits are also considered, in that particular event your calculation performed by Mr. X was incorrect will be the conclusion, and the same conclusion is given here. So there are two alternative treatments, two alternative methods for showing flux method. Flux method consider replacement as well as your separation. Separations are considered. Replacement, if you are considering along with new recruit workers, in that particular case your H calculation, Mr. H calculation was incorrect, can be concluded with this particular computation. So please revise one more time this calculation. This is very important question. We will continue with the next discussion. So before moving to the next question, I'll give you two simple alternatives here. Whatever interpretation you are writing for this event, where labor turnover rate, which is computed by flux, is getting tallied with your Mr. H's calculation. And if it is not getting tallied, in both the cases, you can write two separate interpretations. Now, you can write computation performed by Mr. H is correct when new recruitments are not considered, and even you can write his computation is incorrect when new recruits are not considered for the purpose of calculation. So two different alternatives, two different interpretations are possible, they are allowed. Point number next says, next question, next chapter, which is covered in RTP, is from overhead chapter, absorption costing method. Now very important question, easiest method, easiest chapter, easiest calculations, but very few basic points you need to revise while solving this question. You need to revise entire calculations of absorption rate, over absorption, under absorption, then only you will be able to interpret the question. SE Limited manufactures two products, A and B. The company had budgeted factory overheads amounting to rupees 36,72,000. It's the amount of factory overheads for the company. It is the entire company's amount of factory overhead. The budgeted direct labor hour of 1,80,000 hours. So we have two different datas available with us. The very first data is available with us, which is related to your factory overhead amount, and the second figure which is given in the question is your direct labor hour. If you divide them, there are 6 methods, hope you remember, of calculation of absorption rate. Out of that, if labor hours are given, we can use a labor hour method. So in that event, 36,72,000 divided by 1,80,000 hours, you are going to get your absorption rate, which is equal to 20.4 per labor hour, and this is company's absorption rate. Done. The company uses predetermined overhead recovery rate, that means absorption rate, for product costing purpose. They have given department-wise breakup of entire 36,72,000. Out of 36,72,000, first 25,92,000 overhead are belong to department Pi, and second one is department Q. It is 10,80,000, and the entire 1,80,000 hours are also been divided into two parts, 90,000 and 90,000. When you consider department-wise rate, then department overhead, department's labor, both are available with us. Department overheads, when you divide by department labor hours, you are going to get the given rates. They are 28.8 and 12. They are already computed. The very first rate which we computed is company's absorption rate, and in the table the rates which are covered are departmental absorption rate. Question further says, there is one additional information which says that each unit of product A require 4 hours in department Pi and 1 hour in department Q. That means your product passes through two different departments. In department A, it requires 4 hours to get it complete, and in second department, it requires 1 hour. Also, each unit of product B, there are two products, right? A and B. So specification for product A is available in the first line. Second line itself indicates the specification related to product B. Product B requires 1 hour in department Pi and 4 hours in department Q. So only number of hours required for producing each unit of products is given in this paragraph. This was the first year of the company's operation, which means there is no opening stock. And again, if you read the further information, it is mentioned there was no WIP at the end of the year also. Means whatever is produced is sold. Okay. So opening stock is not there, WIP is not there, but whether closing stocks are there or not, that we need to check. 1,800 and 5,400 units of product A and B were on hand at the end of the year. Sir, 1,800 and 5,400. Are these stocks? These are the closing stocks because they are available at the end of the year, but these are the closing stocks of WIP. No, these are the closing stock of finished goods. There is no opening finished goods. There is no opening WIP. There is no closing WIP, but closing stock of finished goods is given in the question, and that is 1,800 and 5,400 units. The budgeted activity has been attained by the company. That means whatever is budgeted is actually produced by the company. You are required to determine the production and sales quantities of both product A and B for the above year. So very first we need to find out the sales quantity as well as production quantity. If you check the computation which is shown in the suggested answer is very simple. Now, very first point is related with calculation of production and sales quantity. As far as two products are concerned, they are passing through two different departments. First one is department Pi and second one is department Q. Product A requires 4 hours and 1 hour. It is given in the question. Product B requires 1 hour and 4 hours. It is also given in the question. Correct, no? And 90,000 total hours are spent in department Pi and department Q. This 90,000 information was given in the first table of the question. So this much information is available with us. They have assumed X and Y quantities for both the products, and they have formed two equation number 1 and equation number 2. Now 4x and 1y equals to 90,000 as far as first department is concerned, and 1x plus 4y is equal to 90,000 is your equation number 2. When you solve this equation simultaneously, you are going to get x and y equals to 18,000 units. It is the very simple calculation. But the thing which you have computed 18,000, this 18,000 is nothing but production quantity. It is my production related quantity, correct? Now, whatever production quantity is calculated, there is no opening stock because it is the first year of the company, right? No, opening stock is not there. 18,000 units of X and 18,000 units of Y. X and Y quantities are calculated, means 18,000 units of product A and 18,000 units of product B are produced by the company, and out of this quantities 1,800 and 5,400 units are closing stock. That means they are unsold quantities which are given in the question. When you remove this much stock from your production, you are going to get one balancing figure, and that balancing figure is the sales quantity. Simple. Is yes point number 1. Point number 2 says ascertain. Again we need to ascertain something. Ascertain the effect of using the predetermined overhead rate instead of department-wise overhead rate on the company's income due to its effect on stock value. Now, there are two rates which are given in the question. The question printed rate itself suggests that given rates are department's absorption rate, and in the first paragraph, the rate which we have computed is your company's absorption rate, right? Now, what question says? Question says, ascertain the effect of using a predetermined overhead rate instead of department-wise overhead rate. So, there is a conflict. If you are using product-wise department rate, that is the different department rate. If you are using company's absorption rate, that is different. If you are using company's absorption rate, what will be the effect of that particular calculation that we need to show here? Now, please look at the effect calculation. It is very simple. Here is the closing stock of A and closing stock of B recorded, correct? Now, there are two rates available. If you check both of them, then according to our calculation, company's rate is 20.40, 20.40. So, this many units multiplied by 5 hours. Sir, how 5 hours are computed? 4 hours from first department, 1 hour in second department, and as far as second product is concerned, 1 hour in first department and 4 hours in second department. Total 5 hours we are spending on each unit. There is a closing stock of 1,800 unit and 5,400 unit. If one unit require 5 hours, then how many total hours are required can be computed by multiplying total number of hours with the number of units. And same, if you are multiplying with the company's rate, you are going to get the values. These values are computed according to company's rate. But the same calculation, if you perform by using the departmental rate which are given in the question, then your value will differ, no? Now, if you take the difference, difference between what? The difference between the calculation by using company's rate and calculation by using department rate, you are going to get the negative figure. And the negative difference is to be deducted from our calculation. Your profit will reduce. And in second case, if you compare it, this is the positive difference. Difference is to be added to the calculation. Simply you need to find out the difference, and total negative difference and positive difference, if you net off, you are going to get plus 90,070. It is something totally out of track. No question before this RTP covers this kind of adjustment. They have given you company's rate and they have given you department's rate. We computed total value of closing stock by using company's rate. Again, we computed the total value of closing stock inventory by using department rate. We simply calculated the difference. Difference is negative, that is to be deducted. Difference is positive, that is to be added. So when it comes plus 90,720, what does it indicate? Use of predetermined overhead rate has resulted in overvaluation of stock by 90,720. This will overvalue your stock, due to which company's income would be increased, right? No, when stock goes up, this is the asset. When any asset, any stock goes up, because of that, your profit element will also increase, and the impact on profit is computed and shown here. Very simple calculation. Point number 3 of question says calculate the difference. Again we need to compute the difference, but now they are asking us to compute the difference in the selling price due to the use of the predetermined overhead rate instead of using department wise overhead rate. Assume that direct cost, that is material and labor, per unit for A and B were 25 and 40 respectively, and the selling price is fixed by adding 40% over and above this cost to cover the profit. They have given you direct cost related to material, direct cost related to labor. They have given entire direct cost. In short, direct cost is also called as prime cost. They have given you prime cost, that is 25 and 40. In addition to prime cost, first you are going to charge the overhead, and whatever is the total, you will be adding a 40% profit over and above this cost to get this selling and administration overhead. You will be getting the total cost. Try and understand how to interpret this. Now, very first thing, if you want to calculate a selling price, for that purpose, they have given you one working note. They have recorded the given amount of your material and labor. This is your prime cost for A and B, correct? Then production overhead rate is computed. This is something very important. I am putting star mark here. Each unit requires 5 hours, correct? No? Each unit's material cost is given, each unit's labor cost is given, so we should record overhead of each unit. Each unit of product A as well as product B in both the departments, when you add number of hours, they require 5 hours. When you multiply this 5 hours by using your overall company's absorption rate, which we computed in the initial stage, you are going to get the overhead values, correct? By adding up both these amounts, you will be getting the cost of production, and after cost of production, we will be adding 40% margin, and this 40% margin is added for administration and selling overhead. So in short, this one is the total cost of product A and product B. See here, total cost is recorded. So profit, selling price, everything is computed here. Total cost plus profit gives you selling price. Try to understand what has been covered here. Now 40% over and above this cost to cover profit, selling, administration. If you add only selling and administration, you are going to get total cost, but this 40% includes profit also. So profit is including in this price. That's why my 177.80 and 198.50 is nothing but selling price, and this is the price which is computed by using company's absorption rate. The same calculation you need to repeat by using the department rate. Now see here, material and labor cost is recorded, done. Now for calculation of production overhead, first department wise rates are considered, and then department wise overheads are computed, and again of that amount 40% margin is been added. When 40% margin is added, again we have computed selling price, but these are the selling prices which we have computed by using department's rate. Now we need to find out the difference. So here is the difference. First is the company's selling price. This one is your department absorption rate wise selling price. Difference is computed, and unfortunately difference in both the calculations is same, but in first calculation, you are getting negative difference, that is underpricing of the commodity. And in second calculation, you are getting the positive difference, which means the overpricing of the commodity. So difference in selling price either can be termed as underpricing or overpricing. You just need to calculate the differences by comparing the predetermined rate-wise selling price and department rate-wise selling price. So this is quite simple question, lengthy one. You need to connect each and every concept with each other, and that matters a lot. So here is the end of absorption costing discussion. Now let's come to the connected chapter, which is named as activity-based costing. Again, a huge calculation. The profit margin of baby hair clips company were over 20% of sales producing brown and black hair clips. This company is producing two types of product, brown hair clips and black hair clips, and they recover profit at the rate of 20% on the sales. During last year, green hair clips has been introduced at 10% premium in selling price after the introduction of yellow hair clips earlier 5 years back at 10 divided by 3% premium. However, the manager of the company is disheartened with the sales figure for the current financial year as follows. In short, everything is given in the question. They are just trying to make you confused. So please don't get confused, guys. Here entire traditional income statement is given. This is the income statement without using absorption, without using activity based costing. Okay. Now here sales revenue is given. For brown clips, black clips, yellow clips, green clips, material cost has been deducted, direct labor is deducted, overhead 3 times of labor cost is calculated, and this one is called as traditional calculation of overhead. This is the absorption calculation. They have randomly taken overhead which are equal to 3 times of direct labor, but more approachable and appropriate method of bifurcation and apportionment of overhead is activity based costing. So they will ask us to calculate the ABC rates. Total operating income is given. Sir, what is total operating income? When all the expenses are deducted from the sales, you generally get profit, and that operational profit is called as operating income here. And when you divide this profit with sales, that means we are calculating profit percentage. That profit percentage is called as return on sales. They have given you ready-made income statement in the question itself. It is a known fact that customers are ready to pay premium amount for yellow and green hair clips for their attractiveness. And the percentage returns are also high on new product. If you observe the new product are giving you excessive return, extra return as compared to the old products. Both the old products are giving you 13.3% return, but your newly launched yellow and green products are giving you the higher return. At present, all the plant's indirect expenses means overheads are allocated to the products at 3 times the direct labor expenses. The same allocation has been used in the first table. However, the manager is interested in allocating indirect expenses on the basis of activity cost to reveal real earner, and this is something very, very important. Now this company is planning to shift to ABC. ABC is activity based costing than the traditional costing of absorption, and that's why they have given you the classification of expenses. They have bifurcated all the expenses in 1, 2, 3, 4, 5, 6 parts. Total 6 bifurcations are there. If you check the overhead cost, total overhead cost is 1 crores 20 lakhs. Initially, they bifurcated 1 crores 20 lakhs in 4 products according to 3 times of direct labor cost, random calculations, labor into 3, labor into 3, labor into 3, labor cost into 3. They computed the overhead, but now they are willing to convert and present and allocate this 1 crores 20 lakhs overhead amount on the basis of ABC. He provides following additional information for accomplishment of his interest. His interest is to incorporate ABC system, and for that purpose information has been given. Incentives to be allocated at the rate of 40% of labor expenses, both and direct. Now incentives are to be allocated at a rate of 40%. So very first we should record the 40% incentive value first. After that, question says that indirect laborers are involved mainly in 3 activities. So entire indirect labor cost we need to divide into 3 parts. So labor cost is available, done. We need to divide that into 3 activities. First, about half of the indirect labor is involved in handling production run. So whatever is the indirect labor cost, 50% of that we are going to apportion by using the number of production runs, and runs will be given in the question, don't worry. Another 40% is required just for the physical changeover from one color hair clip to another, because yellow hair clips require substantial labor for preparing the machine as compared to other colors hair clips. See, total labor. Now, other than indirect incentives, they have given you indirect labor related information. Whatever is the total amount of indirect labor, out of that first 50% is based on production run. Another 40% is only because of changeover from one color to another color. That is why we are going to bifurcate it into 50% first, then 40%, and after that remaining 10% of the time is spent for maintaining records of the product in 4 parts. They have given you specific information for each and every calculation. Another amount spent on computer system of rupees 20 lakhs is for maintenance of documents relating to production run and record keeping of the 4 products. So what purpose we have spent the expenditure, those purposes are served in this example information. In aggregate, approximately 80% of the amount expend is involved in the production run activity and approximately 20% is used to keep records of the products in 4 parts. So on appropriate basis, we need to bifurcate this balance and expenses. Other overhead expenses, that is machines depreciation, machine maintenance, energy for machine are incurred to supply machines capacity to produce all the hair clips. Practical capability of 20,000 hours is given. If you check, activity cost drivers are given. Sir, what is the meaning of cost drivers? These are the basis by using which we are going to apportion the cost under ABC. Sales volume is given, units, selling price is given, material cost is given, then machine hour per unit are available, production runs are given, and setup time is given. What we need to do? First, we need to calculate operating income, that is the profit, and operating income percentage, that is profit margin, profit percentage of sales using activity based costing. And second, state the reasons for different operating income under traditional income system and ABC. Traditional income system is your absorption system. Why there is a difference? Because of change in method. So in short, we need to present our details and calculations in a systematic format and look at their presentation, which is given in the suggested answer. Very first thing, the total amount of indirect labor plus 40% of incentives. If you check the question, indirect labor amount is given here. Indirect labor is 40 lakhs, and in that 40% incentive, if you add, you are going to get the total amount of 56 lakhs, and this amount is been bifurcated into 3 parts. First 50%, 40%, and then 10%. Correct? First 50% is based on production runs, and total production runs are given in the question. You can see here your production runs are available and total production run is 300. So rate computation can be done, and setup time is also available. When you add up all the setup time, there are total 15 setups been performed by the company. So here 15 setups are given, but these are the per run setups. Number of hour wise calculation is given. You need to multiply them with the total number of hours, and the calculation has been shown here. See here, you need to check the working note for this setup hours, how to calculate setup hours. 100 into 4, 100 into 1, 76 into 6, and 24 into 4. Maximum time. The basic mistake which is performed by the student and committed by the student is the same thing, that individual setup time you are going to consider. This is the setup time per run. This is for one run. Now you should multiply this with the total production run to get the total setup, and the same thing is shown in this working note, and this is how total setup hours been computed. So 50% of your indirect labor plus 40% incentive are to be bifurcated on the basis of 300 production runs. So 28 lakhs divided by 300, you are going to get your ABC rate. The next 40% of the labor cost was 40 lakhs and 40 lakhs. Correct? No, labor cost was given in the question, and allocable cost we have computed 40 lakhs plus 40% is 56 lakhs. 56 lakhs into 50% is recorded here, 40% is recorded here, and 10% recorded here. And according to the associated and the most appropriate basis, we have computed and we have converted them into activity based rate. So drivers are recorded. If you check the computer system, they have given you 20 lakhs figure. Out of that, 80% and 20% amount is bifurcated, and computer systems are also divided on the basis of production run and on the basis of number of parts. Total 4 parts you are preparing. So part wise calculation is performed. Machinery depreciation, no breakup is required. Machinery maintenance, no breakup is required. Energy for machinery, no breakup is required, and that is why full 100% amount is taken, and entire stuff is related to machinery. That's why it is computed on the basis of machine hours. Once this one is done, you just need to compute the ABC wise calculation. Now for ABC wise calculation, very first overhead allocation is important. First of all, quantities which are given in the question are recorded, and when you multiply this quantity with the given selling price, you are going to get the total sales. It is that simple. From sales, the first cost which we deduct is material cost, given clearly in the question. Then we deduct labor cost, and then 40% incentive is also deducted. Everything is sorted and recorded here. See here, 40 lakhs and 16 lakhs are bifurcated into 4 parts according to the applicable rate. Now after this, if you are talking about overhead, here comes important point. See, okay, bifurcation and breakup is available here. Incentive and everything we have computed, and the same amount is been transferred to our calculation in this table. Now if you are talking about overhead, overhead number 1 is indirect labor. Now this one is your direct labor and 40% incentive. The amount which was given in the question related to direct labor and incentive is recorded. Here are the amounts. Labor incentives are given in the question, direct labor cost is given in the question, everything is recorded here. Material cost is given in rupees, but this is per unit, so number of unit will give you total. Done. Once this is recorded, next part comes is apportionment of overhead. So whatever are the totals, according to the computed rate, we have just multiplied with the number of production runs. Same way, this 40% rate is computed in working. This is multiplied with the number of setup hours, and remaining 10% is equally bifurcated between 4 parts because they are being incurred uniformly for 4 parts. As far as computer systems are concerned, 80% computed rate multiplied by number of setups, 20% are equally bifurcated into 4 parts because they are computed at uniform rate. Then machine depreciation is allocated according to number of machine hours, then machine maintenance, and then energy for machinery. All the overheads are apportioned. When you deduct these overheads from the amount of your computed sales minus material cost minus labor cost minus overhead will give you profit, and once profit is available, you can correlate this profit with sale. That is, profit divided by sales into 100 will give you return on sale, and this return on sale will clearly give you that first 2 products are giving you profit, whereas remaining 2 products, according to traditional system, maximum profit giving products are now showing you the losses. Now, if someone asks you which one is the more appropriate method, then as compared to traditional method, more appropriate and approachable method is ABC activity based costing. So this is the lengthy calculation which we have completed with. So first we revised material cost, then we revised employee cost. RTP covers your absorption costing also, totally different question, and along with absorption, correlated chapter, connected chapter, activity based costing sum is also been discussed. Now let's proceed with the next sum. The 5th sum which is covered in RTP is related with the simple and easiest chapter, cost sheet, which is the backbone of your entire costing. Let's read and bifurcate the given data. City Limited is engaged in producing medical equipment. It has furnished following details relating to its products produced during a month. So monthly details are given. Very first details are given related to raw material. They have given us opening stock of raw material, quantity as well as amount. The quantity which you have purchased is available, and closing stock of raw material is also available with us. Second, work in progress, opening and closing stock along with quantity, amounts, valuation, everything is available. Direct employees wages is direct wages for us. Primary packing cost, we always add this primary packing cost. It is given on per unit basis. It is always to be added to net factory cost after research and development and quality control. Research and development and quality control expenses are to be added to net factory cost. Consumable stores, then depreciation on plant is a kind of factory overhead for us. Administrative overhead related to production, we always add to net factory costs. Selling expenses are given. These are selling and distribution expenses are to be added to cost of goods sold. You must remember the format of cost sheet to give this accurate effects. Royalty paid for production is a direct expenditure for us. Cost of website for online sale, if you are performing any sell related activity and if you are spending for the same, that will be treated as selling and distribution overhead, which is to be recorded after COGS. It is to be added to COGS. Secondary packaging cost. Secondary packaging cost is also your selling and distribution overhead. So packaging costs are given. There was a normal scrap of 250 units of direct material. Guys, this is the scrap, but it is not scrap of byproduct. It is scrap of material, which is realized at 5,400 rupees per unit. So this scrap is to be deducted from the RMC, that is raw material consumed. While calculating direct material cost, it is to be subtracted. The entire finished product was sold at a profit margin of 20% on sales, means your cost plus profit is equal to sales. So when selling price is 100, you are going to charge 20% profit. That means for your cost will be 80%. So in short, your profit is 20% on sale, that is 25% on cost. You are required to prepare the cost sheet showing prime cost, gross work cost, factory cost, cost of production, profit and sale. Entirely format you need to follow. See, the given suggested answer itself says that first you should record material. Entire material thing is recorded. Opening stock at purchases less closing stock. And from that, they have deducted a sale of scrap of raw material also. Scale of scrap of raw material quantity along with amount per unit is given. When you multiply this, you are going to get the total. Systematically, you need to calculate the subtotal, which is your RMC. After RMC, you should add direct wages, you should add direct expenses. Addition of all these items will give you your prime cost, and prime cost quantity is also available. Means this cost has been incurred on 48,000 units. After prime cost, according to our format, we add factory overhead so that we get GFC. GFC stands for your gross works cost. In gross work cost, we should adjust opening and closing stock of finished goods. Once opening and closing stock of finished goods is adjusted, you are going to get the factory cost, which is also called as works cost, and works cost has been incurred on 49,000 units. After work cost, 5 items we generally record. Amongst 5 items, first is research and development, quality control, both are given together. Then we record primary packaging, that is also recorded. It is given at the rate of 1440. When you multiply this 1440 with the available number of units of 49,000, you are going to get the total value. And after that, administration overhead related to production should be added. If you are asking for the 5th item, that is sale of scrap of byproduct, which is not mentioned anywhere in the question, that's why that is not considered, and directly they have computed the cost of production for 49,000 units. You have produced 49,000 units. In 49,000 units, there is nothing like opening stock of finished goods and closing stock of finished goods. That's why we are assuming whatever is been produced by the company, they have sold the same thing, and all the selling expenses are incurred on selling the 49,000 units. Secondary packaging cost is also computed on the basis of 225 rupees per unit. Multiply by 49,000 units, cost is available. Addition will give you total cost, which is called as cost of sales. Cost of sales is 80, profit is 20, selling price is 100. Either go for cross multiplication or else you can take 20% on selling value. That means profit is 25% on cost. Directly even calculation is possible, and here is the end of the basic discussion of this. Now, once this is done, if you check the next chapter which is covered in RTP is cost accounting system. In cost accounting system, systematically they have covered only one question related to reconciliation statement, and the same question is there in JK Shah classes textbook. You can check this. To be very precise, this is question number 8 of cost accounting system according to the book which has been issued to you. Question related to reconciliation has given you some information, but this is the information given for financial books. So whatever information is available with us, that information belongs to financial record. They have given you opening stock of finished goods, opening stock of WIP. The transactions took place during the year are given: material consumption, direct labor, factory overhead, goodwill written off. Each and every item is available. Along with this, if you check, sales units are given, then finished goods closing stock is given. If you observe, quantity sold, closing stock and opening stock, all 3 units are available. By using this number of units, we can calculate number of units produced. See, opening stock is given. In opening stock, we add quantity produced, then we deduct closing stock. This gives us quantity sold. Out of these 4 elements, 875 opening stock is given, 375 closing stock is given, and 14,500 units sales units are given. So production quantity can be computed, which will be 14,000 units. So production quantity is available. Something related to the cost record is also given in the question. Cost record provide as under: factory overheads are to be absorbed at 60% of direct wages. If you are preparing cost records, then in cost record, the factory overhead which are given in the question, no, this amount of 6 lakhs rupees we are not going to show, because this is financial information. As far as cost related information is there, we should separately calculate the factory overhead, and factory overheads are to be computed at a rate of 60% of the wage amount. Same way, recovery rate for administration overhead is also given, which is to be used in our cost records. Selling and distribution overheads amount is given, but this expense is incurred on per unit basis, so you should multiply it by number of units sold, and number of units sold are 14,500. 14,500 into 8 will give you amount of 1,16,000. Opening stock valuation basis is given. Now, if you compare this RTP question with JK Shah classes material, exactly double amounts are given in this question, and JK Shah classes question covers only 50% amount. That is the only difference. Remaining each and every calculation is same. You can refer that question for your revision. The company values WIP at factory cost under financial system also, under cost system also. For both the profit reporting, WIP valuation is same, which clearly indicates that WIP value will remain same irrespective of cost records and your financial records. WIP value will remain same. They are asking us to prepare the statement showing the profit as per financial records, profit as per cost record, and then we need to reconcile both the profit. Now, for the purpose of financial record profit calculation, simply you need to prepare P&L account, which we used to prepare in 11th and 12th standard. Credit side will start with sales, closing inventories, few incomes. Debit side will start with stocks and other expenses, and this is something profit which is computed by using financial P&L. After financial P&L, they are using this costing record, and costing record, they first recorded the sales, then they have computed cost of sales. Instead of using income statement format, you can even solve this question by using cost sheet format also. So whatever is format, ultimately you are going to get the same thing. Now sales is 14,500 unit. At what price you have sold all the units is available, and there is no variation in sales. That's why sales value is recorded here. Opening stock is valued 875 units at the rate of 205. Then cost of production, this is the number of units produced, which we computed in the beginning of the sum discussion step only. Closing stock is also valued at cost of production for the current year. So they have prepared this working note, and by preparing working note, they have computed the profit according to your cost records. Now, by using this kind of working note, you can calculate profit by using cost record related information. Alternatively, easiest way to calculate the profit as per cost record is preparation of cost sheet. Strictly follow the format of cost sheet, strictly follow the rules of cost sheet. You are going to get the same profit in your cost sheet, and once these profits are available with you, you can start your reconciliation statement with any of the profit, any profit you can use. Now, in suggested solution, they have started their computation with profit as per cost records. Done. Now, if you are starting with cost record, then your costing P&L will carry plus and minus sign, and financial P&L will carry minus and plus sign. You need to compare each and every item. Now, if financial item is lesser than costing, then you should add that in the reconciliation statement, and vice versa. Same thing is used, and they have prepared the entire reconciliation statement. Kindly practice this sum before examination. So this is something related to reconciliation statement. If you check the next question is again simple, related to cost sheet format only, but this question is from the batch costing chapter. PS Limited manufactures articles in predetermined lots simultaneously. The following costs have been incurred for batch number PS143 in the month of March 2020. The given information is related with a single batch, and the number of that batch is available PS143, and this expense you have been incurred only in the month of March. Number of units produced, material cost incurred, labor related information is given, department wise labor cost has been incurred. Then factory overhead related information is given. They are incurred and they are absorbed on the basis of labor hours, and labor hours are available with us. So same labor hours you need to multiply with the departmental rate. Administration overheads are absorbed at a rate of 10% of selling price, and company expects 25% profit, that is sales minus factory cost, that is the gross profit on this value for determining the selling price. You just need to prepare one cost sheet type of format to present this information. You can check here. Raw material related information is given. Raw material related information is given, that is recorded. Labor related cost is computed by multiplying number of hours with the labor rate. They have computed same factory overhead by using the departmental rate. They have taken basis of number of labor hours and they computed factory cost. Now, as for given information, administrative overheads are 10% of selling price. So 10% of selling price are computed, but they have given specifically that 6,72,000 is your factory cost, correct? Now, factory cost by 75% they have done. Sir, why they are doing this particular calculation? Because see, here it is mentioned that firm expects 25% of profit. Sales value minus factory cost. Sales value is 100. Your profit is 25, so remaining is your factory cost, and that is why 75 is taken into consideration, and for that amount they have computed this 10% value. They have added profit to all the calculation, and then they have determined the selling price. Total selling price, when you divide by number of units, you are going to get the selling price per unit, and here they have simply concluded with the selling price per unit calculation. If you notice question number 1, question number 2, question number 3 and question number 4 of RTP, first 4 questions are horrible. They are not difficult, they are comprehensive type. They are comprehensive type questions and they have covered lots of calculation with lots of minor important point. But if you come across question number 5, question number 6 and question number 7, they are very simple and easiest question based on cost sheet related information, right? Now, there is one more important and simple chapter covered in question number 8, and that is contract costing. Trust me guys, believe me guys, this question carries only and only posting related stuff, nothing else. A contractor prepares his account for year ending 31st March each year. His commencement date is given. He commences his contract on 1st July 2021, but he closes his account on 31st March 2022. So July, August, September, October, November, December, January, February and March. The given information covers the period of 9 months. So during this 9 months, the material issued is 12,55,000. It is to be recorded on the debit side. Wage cost to be recorded on the debit side of contract account. Salary to foreman to be recorded on the debit side of contract account. Again, similar question is there in JK Shah classes textbook. To be very precise, it is question number 2 from homework section of JK Shah classes. Question number 2 from homework section. Okay, to be very precise. Machine costing rupees 13 lakhs. This is the cost of machine. Scrap value is 75,000. Its life is 7 years. By using this information, you can calculate depreciation, but this formula will give you depreciation for entire year. This is the formula which we always use for calculating the annual depreciation. So here annual depreciation is 1,75,000. Have you used machine for entire year? No, machine has been used on site only for 4.8 months. So into 4.8 divided by 12 will be the further calculation, and in this case 70,000 rupees will be the amount of depreciation. In case guys, if 4.8 months is not mentioned in the question, you should consider 9 monthly depreciation, because contract period which is covered here is of 9 months. Supervisor is paid 40,000 per month. So generally 40,000 per month is given. My contract period is 9 months. So basically I should multiply it by 9. But he has devoted only 1/2 of his time. Half of his time means only half of his salary is related to the contract. So it is 40,000 into 9 months into 50%. That means 1,80,000 salary to be recorded on the debit side of contract account. So on debit side, in all, we will be recording total 5 elements. 5 elements. Total 5 elements are to be recorded, sir. 5 elements. Which 5 elements? First, material. Second, wages. Third, salary to foreman. Third, after that, fourth one is depreciation, then supervisor salary, and other expense number 6 to be recorded on the debit side is 6,82,500. All 6 items to be recorded on the debit side. You can check the suggested solution. On the debit side, they have recorded 1, 2, 3, 4, 5, 6 elements. Completed? Then, now if you check the other information, they have given you the contract price. And before that, material at site is given. This is closing stock of material to be recorded on the credit side of contract. Now, total contract price is 1 crores. On 31st March 2022, 2/3 of the contract was completed. So, 1 crores into 2 divided by 3 means approximately 66,666,666 work is done by you. Out of this work done, you need to divide and bifurcate this total work completed into 2 parts. First one is certified and second one is uncertified. Question says that architect issues certificate covering 50% of the contract price. In classwork section, this adjustment has been covered. JK Shah classes, textbook, classwork section, question number 2. Similar question is there in homework section. But as far as this adjustment is concerned, this adjustment, to be very precise, is covered in classwork question number 2 of JK Shah classes. It is 50% of contract price. If you compute 50% of 1 CR, your work certified will become 50 lakh. So randomly, if you minus this figure from your total work done, you are going to get 16.666667 lakhs as your work uncertified plus. Please guys, be very careful. Now the work done is recorded at selling price because contract price is the selling price. Builder, contractor is ready to sell his work at that particular price, and that's why that contract price is selling price, correct? We have computed 2/3 of the entire selling price. So 66,66,666 is my selling price. Work certified, we record always at selling price, but very important point of this question that cost of work uncertified is to be ascertained, whereas the balancing figure which we have computed is the selling price of work uncertified. Sir, how to calculate that? Now, if you check this, this is the cost of work. Sir, how work cost is computed? Debit side, all the elements, your material, labor, foreman salary, depreciation, supervisor salary, admin overhead, this 6 item minus closing stock of raw material. If you perform this calculation on your calculator, these all are the expenses which you have incurred for this particular period. Means for completing 2/3 of your contract, this many expenses are incurred and closing stock is unused. That's why that is removed from our calculation. This will give me cost of a project completed till now. Now, selling price of the project completed was 66,66,667 and cost of the project completed was 52,45,000. Then I just need to calculate what will be the cost for 16,66,667 work uncertified. These both are the selling prices of work done and work uncertified. I am calculating the cost of work done and work uncertified. When you multiply this and then when you are going to divide it by 66,66,667, you are going to get your work uncertified, which will be approximately 13,11,250. Please cross check. 16,66,667 multiply by, first divide, otherwise calci will show error. 66,66,667 multiply by 52,45,000. This will give you 13,11,250 as work uncertified cost, and this was the very important point of this calculation. The entire sum has been discussed, only posting related question, and one of the great and important point of this question is 13,11,250, which has been computed and entirely contract account has been prepared. So this one is very important discussion. Now, once this is done, we will be starting with the next point, and that one is the process costing related question. Question number 9 is the next one. One more important chapter is covered in RTP, and that is your process costing. If you check the question which is given in RTP, is very basic type of question where no equivalent production, no inter-process profit, nothing is given. Simply they asked you to prepare process accounts. Now, if you read question number 9, clearly each and every information is given, no hidden adjustment. SM Private Limited manufactures their products in 3 consecutive processes. The details are as follows. Process A, process B and process C, total 3 processes are covered here. The proportion of the output which is to be transferred to the next process is given 60%, 50%, and the production or the outputs proportion which is to be transferred to the warehouse for selling purpose is given 40%, 50% and 100%. So entire output on the credit side of process account is to be bifurcated into 2 parts. In each process, there is a weight loss of 2% and scrap of 8% of input, means total 2 losses we should record on the credit side. Weight lost is to be computed at the rate of 2% of input and scrap is to be computed at the rate of 8% of input. So as far as your weight loss is concerned, weight loss never carries any kind of scrap value. It is without scrap value. But whatever is the scrap, that is 8%, that is to be sold at the scrap value, and scrap values are given in the question. The scrap value for process A, B and C is 2 rupees, 4 rupees and 6 rupees per ton respectively, and expense related information is given process wise along with material input. The material which is used is nothing but material input in the production process is given in tons. So this is input quantity of material is given. Along with that, rate of material is also available. When you multiply quantity with rate, you are going to get the total material input value for each and every process. Direct wages is given, direct expenses are also given. These all are the expense related information to be recorded on the debit side of process account. Question simply says prepare process account A, process account B, process account C and calculate cost per ton at each process. Now for calculation of cost per ton, that is cost per unit, the formula which we use is total of debit side of process account. From that we deduct normal loss amount and denominator consists input quantity minus normal loss and weight loss quantity which is mentioned in the question. If you check the given information, they have prepared simply process account by recording the given data. All 3 expenses are recorded on the debit side. Whatever is the quantity of input, 2% they have computed as weight loss, 8% they have computed as your scrap value. Scrap value is given in the question. Scrap is to be valued at a rate of 2 per ton and total amount is been computed. The balancing figure is calculated as your output and output is divided into 60 and 40%. 60% you are transferring to the next process and 40% you are transferring to the warehouse for selling purpose. Now if you want to calculate cost per ton, that is cost per unit, total of debit side is taken. Then normal loss amount is deducted from that. Input quantity is recorded. Scrap and weight loss both are deducted from this calculation and we have computed this 30 rupees. On this 30 rupees basis only we have valued the process B and warehouse related expenses. Correct? Output valuation is done. 540 is the quantity, 540 tons. If you are valuing them at the rate of 30 rupees per ton, you will be getting 16,200 and so on. The same thing is repeated for process number B also, and same thing is repeated for process number C also. If you check, there is no abnormal loss, there is no abnormal gain, everything is given very straightforward. So this was our question number 9. You need not to worry for this question. You need not to put maximum efforts for revising this kind of question because this question belongs to the simple category of question. Now the next category which is covered is related with your next chapter, which is directly connected to the process costing, and chapter's name is joint product and byproduct. JP Limited uses joint production process that produces 3 products at the split off point. Means at separation point, this company gets 3 different products and joint production cost is given directly. You need not to find out the cost. It is available with us. This is 33,60,000. Product information is available. Number of units produced are given. Selling prices at split off point and selling prices at final stage are also available. Means company is having 2 options, either to sell off the product at split off point or to further process the product and sell at the final stage. Both the things are available. Decision making is the part of this chapter. So chances are there they'll ask us to take the decision also. Cost to process after split off is called as further processing cost under normal circumstances. Other information is also given. Product C is a byproduct, and a company accounts for the byproduct at net realizable value. So they are apportioning byproduct at NRV as a reduction of joint cost. Product B and C must be processed further before they can be sold. So further processing is required, and it is must as far as product B and C is concerned. Question is asking us to find out the joint cost allocated to product A in the month of July. If joint cost allocation is based on NRV, for solving this question, Nrv calculation you must know. How to calculate NRV of the product? For that purpose, very first, quantity is to be multiplied with the selling price at final stage, correct? This will give you final selling price. This is the sales value at final stage, correct? From this final sales value, when you deduct the further processing cost, the ultimate result is called as your NRV. NRV is net realizable value, and the same basis is to be used for the apportionment and allocation of your joint cost. See how this solution is presented here. Question says product B and C must be further processed before they can be sold. It means product A can be sold at split off point. It is silent adjustment. Now B and C must be processed further. That means A is having two options. You can sell that product at split off, even you can sell that product at final stage, and that can be analyzed and interpreted with the help of these prices also. If you check the selling prices, they have given you two different selling prices for only product A, but they have given you selling prices of product B and C only at final stage. Means your product B and C is not having any market at split off stage, correct? Now read next information. Cost to be process product A after split off point is 6 lakhs is given. This is the further processing cost mentioned in the question. Additional revenue to be generated by further processing is 3 lakhs. Sir, how to calculate the additional revenue? See here. Now, if 3 lakhs into 200 and 3 lakhs into 300, you are comparing 3000 units, my mistake, into 200 gives you revenue of 6 lakhs. This is the revenue at split off point. And 3000 into 300 is 9 lakhs. This is the revenue at a final stage. So by selling product at final stage, additional 3 lakhs rupees can be generated. This is the additional revenue, incremental revenue. But for generating this revenue, you have to incur cost amounted to rupees 6 lakhs, correct? No? So for earning 3 lakhs, if you are incurring 6 lakhs rupees as your further processing cost, boss, you are into a loss. You are making a huge loss of 3 lakhs rupees here. This product should not be further processed is my interpretation. Let's check what has been given here. Your additional revenue is 3 lakhs, correct? Therefore, product A will not be further processed as sales revenue at split off for A will be used for allocating the joint cost, and that's why sales revenue at split off is considered, because further processing is resulting in a loss. Hope you have understood this calculation. By selling product at split off, you are generating 6 lakhs rupees. By selling product at final stage, you will be generating 9 lakhs rupees. So incremental 3 lakhs rupees you are generating, but for this purpose you are incurring 6 lakhs rupees for the processing cost. That means this will result in loss. That's why it is advisable to sell product at split off only, and split off will give you revenue of 6 lakhs. So this is what concluded. Point number B. Product number B, if you are selling this product at final stage, you can multiply this. How many units you will be selling? 6,000. 6,000 units you will be selling at the rate of 350 is 21 lakh. When this sales value is available, you should deduct further processing cost from that. 6 lakhs, 21 lakhs minus 6 lakhs will give you NRV of 15 lakh rupees. This is also given, and the same stuff is performed in last calculation. The quantity which is given in this question for last product is 9,000 unit. If you are selling them at 100 rupees, you will be generating 9 lakhs rupees revenue. But total sales revenue 9 lakhs. When you deduct this 6 lakhs rupees from your total calculation, this will give you net realizable value of 3 lakhs rupees, and 3 lakhs is also computed. Now on the basis of this bifurcation, like 6 lakhs, then 15 lakhs, and 3 lakhs, if you are using this proportion for the purpose of bifurcation, sir, these values are called as what? These all are the NRVs, right? No? These all are the NRVs. Now my joint cost is 3360, that is 33,60,000. On this basis, this joint cost is to be allocated. 33,60,000 is to be allocated on the basis of 6 plus 15 plus 3, 24 lakhs. So this is my NRV and this is my joint cost. Easily you need to bifurcate this. Now before that, now something is concluded here. Since byproduct C is accounted for as a reduction in the joint cost, the joint cost to be allocated are 30,60,000. Sir, how 30,60,000 has been computed? My total joint cost is 33,60,000. Now try and understand this calculation. Now this last point of question matters a lot. Now it is specifically mentioned in the last paragraph. This paragraph is going to change your solution. Product C is a byproduct and the company accounts for the byproduct at net realizable value as a reduction of joint cost. Now by selling product C, how much revenue you are generating? 3 lakh. And this is accounted as reduction in the joint cost. So because of 3 lakhs, your joint cost will reduce by 3 lakhs. So your revised joint cost in this case will become 30,60,000. And this 30,60,000 is to be bifurcated into two parts. Correct? No. Now this information matters a lot. And if you divide this into two parts in the proportion of 6 lakhs and 15 lakhs, you are going to get the proportionate joint cost of both the product, and this is the bifurcation. Now if this byproduct wise information has been not given in the question, it's been not provided in the question, in that case divide 33,60,000 in NRV proportion. But if this kind of information is given which says that your byproduct to be reduced, your joint cost is to be used for reducing the joint cost of your all the product, then first reduce the joint cost by using the revenue generated by selling product C, and whatever balance joint cost is available, that is to be divided by using the proportion of the NRV of the remaining product A and B. So this was the simple and easiest calculation which we just completed. So process account, simple calculation, joint product byproduct, simple calculation. The only important and exams point of view, huge weight carry a point is your point number last, and that is your joint cost apportionment, and this 3 lakhs adjustment of rupees 3 lakhs revenue. It is adjusted against the total joint cost is the important point of this question. Now please mark it as important, put star mark over there. This last paragraph was very important. Now let's start with the service costing discussion. Now as far as this service costing is concerned, each and everything is given directly. See, again this one is the direct category of question. There are no hidden adjustments, there are no minor points to be kept in the mind. Only the thing is the given information, and this given information covers everything. Royal Transport Services runs fleet of buses within the limit of Jaipur city. The following are the details which were incurred by the company during October 2021. So October 2021 details are available. Cost of bus is given. By using cost of bus, the only expense which you calculate is your depreciation. So depreciation is to be computed by using this. Garage rent is given. Insurance is given. This is the information on monthly basis. Insurance is given. Road tax is given. Manager salary is given. Assistant salary is given 32,000 each, but there are 2 employees working as an assistant. There are 3 supervisors. We are giving them 24,000 each. Driver salary, 25 persons are there who are working as a driver. We are paying them 20,000 rupees each. Cleaners salary, 20 cleaners are working with you. Office staff salary, consumable, repairs, maintenance, other fixed expenses is given. Now, as far as diesel cost is there, it is given kilometer wise. It is a kind of running cost. It is a kind of variable cost. You are incurring 80 rupees cost for every 10 kilometers of distance covered. So, total kilometer we should calculate. Oil and lubricants are given 1,45,000. All the cost expenses are available with us. Tires, tubes are given, and depreciation is given 10%. In the first line itself, if you check the details of expenses, they have given you the cost. On that cost of a single bus, if you are charging 10%, you will be getting 1 bus depreciation. Occupancy related details are given. There are 25 buses. 12 buses runs with 60 passengers and 13 buses runs with 50 passengers. Each bus makes 4 round trips a day. means one way trip, and then again returning back is considered as round trip a day, covering a distance of 10 kilometers in each trip. One way 10 kilometers, so round way and round trip covers total 20 kilometers per trip on an average on per day basis. During the trip, 80% of the seats are occupied. The annual record shows that 5 buses are generally required to be kept away from roads each day for repair. So there is garaged number of bus given in the question, and they are 5. We are required to calculate the cost per passenger kilometer. So first we will calculate cost, and then we will calculate passenger kilometer. When total cost you are going to divide by passenger kilometers calculation, you will be getting your answer. We need to prepare cost sheet. It is to be prepared for 25 buses. So on 25 basis we need to prepare cost sheet. So they have simply prepared the cost sheet. Depreciation at a rate of 10%. This will give you annual depreciation of one bus. We are converting these details on monthly basis by multiplying 1 by 12. And for 25 buses, if you compute, you are going to get 5 lakhs as your depreciation. Remaining all the expenses are given directly. All the expenses are recorded. Oil, tire, everything is given. Only important point is diesel cost. Now, diesel cost is given 10 kilometers. Every 10 kilometer diesel cost is 80 rupees. Then total kilometers are needed for this. So we have computed total kilometers here. Now 12 buses are going to run for 10 kilometers, correct? No, 10 kilometers one way. Now they are going to return, that means 2 trips, one way, and 4 round trips, means total 20 kilometers into 8 into 31 days. Sir, why 31 days are taken into consideration? If you check this month, the month which is given is October, and October always has 31 days. So for the purpose of calculation, 31 days are taken, and this calculation is being performed for 12 buses. Then for 13 buses, same calculation is repeated. Okay, this is your total kilometer, 62,000. Now 62,000 is your total kilometer, and along with that 62,000, see here, 5 buses are for repairs. No, out of 25 buses, not all 25 buses are working on daily basis. Every day, total 5 buses you are garaged. That is, total 5 buses are into non-working situation. So 62,000 is the total kilometer for 25 buses. I just need to calculate the kilometers for 20 buses, and 20 buses kilometer is 49,600, and that is why diesel cost is calculated by 49,600. So that is your 80 rupees you are incurring for 10 kilometers. Then for 49,600 kilometers, how much will be the cost is computed by simply doing the cross multiplication, and total cost is been computed. Once total cost is computed, this cost you should divide by passenger kilometer. In this working, kilometers are computed. But now we should multiply this kilometer with number of passengers. This all kilometers, 60 passengers are traveling with 80% occupancy, and all these kilometers, 50 passengers, number of passengers capacity is given in the question. 50 passengers are traveling with 80% occupancy. Here we have computed total passenger kilometer, and when you divide your total cost by total passenger kilometer, you are going to get the cost per passenger kilometer, and here is the end of service costing. Students, if you check this RTP, we are slowly moving to the easiest calculation, which we started with the lengthy and comprehensive calculation of the chapters like material, employee costing, then we moved to absorption overhead, then activity based costing, then smaller calculation, batch costing, cost contract costing, cost sheet, process costing, joint product, byproduct. Almost all the chapters are covered in this RTP. Now, if you check the next question which is given in RTP is related with the standard costing, and for understanding this question, formulas are important. Let's have a discussion. Question number 12 of RTP is fully based on standard costing concepts, where question itself says that Han Limited operates a system of standard costing in respect of one of its product, and the product name is AH1, which is manufactured within a single cost center. Means there are no multiple departments engaged in this activity, only one cost center is there. Details of standard cost per unit are as follows. That means given standard is for 1 unit of production. So this is my given standard is equal to 1 unit. After that, the standard material input is given 20 kilograms, means for producing 1 unit of a product, 20 kg of material is needed at a standard price of 24 rupees. This is SR given. The standard wage rate is 72 rupees per hour. This is the hourly wage rate, and 5 hours is the requirement to produce a 1 unit. And a fixed overhead cost is given. Fixed overheads are absorbed at the rate of 100% of wage cost. This is something called as standard cost. Now, if you read the next line, during the month of April 2022, the following was incurred. Incurred means next information is related with the actual cost of a product. Actual price paid for material is available 22. Total direct wage cost is given. It is 43,92,000. Then fixed overhead cost incurred is given 45 lakhs, and along with that they have given you various variances. Variance number 1 is material price variance. Material price variance is given favorable. Material usage variance is given favorable. Labor rate variance is given. Labor efficiency variance is given, and fixed production overhead expenditure variance is given, which is adverse. By using the same information, they have asked us to calculate some figures. The first thing which is asked is calculation of material cost variance. If you are aware about the relationship between material cost variance, material price variance and material usage variance, you can easily calculate this figure. Your material price variance is given 4,80,000. Material usage variance is given 48,000. Both are favorable, means both the figures are positive. When you add them, you are going to get the total value of 5,28,000 favorable, and this is the answer of material cost variance, which is given in first point of your suggested answer. See here, simple question. Point number 2 says you should calculate the budgeted output in units. For calculation of budgeted outputs, they have utilized the formula of fixed overhead expenditure variance. Whenever you guys are calculating fixed overhead expenditure variance, no, it is equal to budgeted fixed overhead minus actual fixed overhead. That is budgeted minus incurred, correct? Now, if you want to calculate budgeted fixed overhead, formula to be used is budgeted output into standard rate, and actual overhead is equal to actual output into actual rate, but this actual fixed overheads are directly given in the question. Now, the answer of this particular point, that is your budgeted production overhead variance. Budgeted production overhead expenditure variance is given 1,80,000. So 1,80,000 is equal to budgeted output into 360 rupees. Sir, how 360 rupees is calculated? Now, for each hour you are spending 72 rupees. For 5 hours, the total amount required is 360. That is the standard rate for your production, correct? And actual amount of overhead incurred by the company according to the given information is 45 lakhs. So just you need to substitute the figure, and after substituting the figure, you will be getting your budgeted output of 12,000 units. It is that simple. Simply you need to put the formulas. Next question says you should calculate the quantity of raw material purchased in kilograms. If you want to calculate quantity of raw material purchase, then for purchasing you are spending some money, and that money is called as price. So we have used here price variance. Price variance is equal to actual usage, that is your actual quantity, into standard price minus actual price. Standard price minus actual price into actual quantity is the formula. The formula has been used and total consumption is calculated, which is 2,40,000 kgs. Everything is given in the question. Point number next is actual output. If you want to calculate actual output, then again they have used actual output related information. Actual direct wages amount is available, and this amount they have adjusted with your labor rate and labor efficiency variance, right? Labor rate and labor efficiency, if you adjust along with this, you get the labor cost for the actual amount. This one is the total labor cost. Again, same correlation has been used. Your labor cost variance is divided into two parts. First one is labor rate variance, second one is labor efficiency variance. My labor rate variance is 69,120 adverse. My labor efficiency variance is available 33,120 favorable. And once these details are available, you are going to get the labor cost variance. If you adjust that variance with the given labor cost, standard cost can be computed in the bit. Standard cost is computed, actual wages are given. When you adjust this, standard cost can be computed. Sir, how to calculate standard cost? Sir, it is minus 69,120 plus 33,120. This one is 36,000, correct? Now your labor cost variance is standard cost minus actual cost. This one is 36,000 negative. Out of standard and actual labor cost is given in the question. You can check here. Actual labor cost is 4392. So my actual cost is 4392. Standard cost can be calculated. The same stuff is been used here. They have taken 4392. In that they have adjusted both the figures, and once these both the figures are adjusted, you are going to get your total value which was missing, and that is the value which is 4366. Computed? Done. Once this is calculated, for calculating actual value or actual output units, they have used this particular thing. 43,56,000 adjusted value is divided by 360. So for 1 unit, 360 rupees you are spending, you have actually spent 4356. Then for that purpose, for that the standard thing, how much units are required, that is computed. Alternatively, by using X value also, you can use material cost variance formula, can be used for that purpose only. If you read the next point of the question says calculate the actual hours worked. For the purpose of calculating actual hours worked, you should use the efficiency variance, substitute the figures available with us, and once these figures are substituted, you are going to get the amount of your hours, standard hours worked. By preparing table also you can solve this question. Okay. Point number next is actual wage rate. Again, for actual wage rate, total wages paid amount to be divided by the number of hours. When amount you are dividing by number of hours, you will be getting the wage rate readily available with you. And finally, question is asking us to calculate labor cost and production overhead cost. So labor cost and production overhead cost is computed by using the same relationship which we have already done, 36,000 adverse. Sir, when? Sir, please no, look, no, cost variance is 36,000 already computed, and after that they have computed the production overhead variance by comparing both the cost. It is 1,44,000 adverse. So entirely it is recorded, and this is the end of standard costing. And once standard costing is recorded, there is one formula based chapter which carries huge weightage from exam point of view, and the name of chapter is marginal costing. Let's read. RPP manufacturers is approached by an international customer for one-time special order similar to one offered to its domestic customers. Per unit data for sales to regular customer is provided below. The data which is provided below is related to the regular customer. Whenever you are supplying product to the regular customer, these all expenses you incurred. Material cost, direct labor cost, variable cost, these all are the variable in nature. All the direct costs are variable in nature. Fixed cost is given, total manufacturing cost is given, markup is nothing but profit, profit is added to the cost, and selling price, targeted selling price is computed. It is provided that RPP manufacturers has excess capacity, they have spare capacity available with them. What is the full cost of the product per unit? They have asked us to calculate full cost, and if you want to calculate full cost, all the variable plus fixed cost are to be added. After adding up all the cost, you are going to get the full cost. This is the easiest and funniest calculation out of entire RTP. What is the contribution margin? Contribution margin is selling price minus variable cost. So first you should record selling price, you should deduct all the variable cost from that, you are going to get your contribution, easiest part. Then which costs are relevant for making the decision? Obviously your all the marginal cost, no, contribution related cost are related cost, and they are very important for the decision making. So 693 direct labor and variable, entire total of 1512 per unit is relevant cost for decision making, because contribution based decisions are to be taken. Fixed cost is irrelevant for decision making because it is not unit cost, it is the period cost and unavoidable in nature. Point number 4 says for RPP manufacturers, what is the minimum acceptable price of this one-time special order only. When questions say minimum acceptable selling price, that means you should calculate the total cost of that. And total cost is 1512, means at least this much cost is to be recovered from the product. So this can be set as your minimum acceptable selling price, where your contribution will become zero, right? No? And finally, for this one time only special order, should RPP manufacturers consider a price of 2100 per unit? If yes, then why? If no, then why not? Both the things are asked. Yes, RPP manufacturer may consider this price because it is greater than the minimum acceptable price. So your profitability is covered in this price. That's why your answer must be yes. You should accept this particular price because profit is covered. And this is the end of discussion. The very easiest part of question number 13A is been covered. Only question answer. But appropriate answers are expected here. Point number B. The lab corner of New Life Hospital Trust operates two types of specialist MRI scanning machines, MR10 and MR59. Following details are estimated for the next period. They have given you running hours, variable running costs are given, and fixed costs are also available. A brain scan is normally carried out on machine type MR10. This task uses special technology costing ₹100 each and takes 4 hours of machine time. Because of the nature of the process, around 10% of the scans produce blurred and therefore useless results. So 10% can be treated as scrap. Calculate the total cost of a satisfactory brain scan on machine type MR10. So very first part of question is asking us to calculate total cost, and for that purpose you should record all the relevant expenses. Variable cost is given in the question. Total variable cost is divided by MR10 number of hours to get the hourly cost. In that, fixed cost is also converted into hourly basis. Absorption rate has been computed, and after that cost of brain scan is computed. As far as variable machine cost is concerned, you can check your variable machine cost is 68,750. It is given in the question, and that 68,750 is already recorded. Your fixed cost 50,000 is given in the question. That is also already converted and recorded. Now question itself says this particular brain scan is normally carried out on machine type MR10. Right now, if you read the next line, now variable machine cost is 4 hours into 62.5. So 4 hours are considered for the purpose of calculation, and after considering 4 hours we have considered, see here, 4 hours of machine time is been given in the question. So 4 hours into hourly rate is considered. Special technology cost directly given, that's why that is directly recorded, 100 rupees. And once this all costs are recorded, you are going to get the total cost, and total cost when you divide by 0.9, you are going to get this. Sir, why we have multiplied this 0.9? Because 10% is your wastage, and that wastage is been removed. So MR10 related cost is calculated. Point number 2 says brain scans can also be done on machine type MR59. This is the alternative option available with the company, and would take only 1.8 hours per scan with a reduced reject rate of 6%. If you compare it with the MR10 uses 4 hours and 10% was the rate, but here see rejection rate is 6% and it takes only 1.8. However, the cost of spatial technology would be 137.5 per scan, which was 100 rupees per scan. And now advise which type of machine should be used. Assuming sufficient capacity is available on both the machine, consider fixed cost will remain unchanged. So if you check fixed cost, which we have computed here, 181.84 is taken here, same amount of fixed cost is considered. Now fixed cost, if you want to consider, now 4 hourly fixed cost was considered here. Here revised calculation is available. Now you can see here comparable values are taken for the decision making. You can prepare only MR59 related data and you can directly compare them, or you can even use this method. It is given that total fixed cost will remain unchanged and thus they are not relevant for decision making. So decision making purpose, fixed costs are not considered because they are not unit cost, they are period cost. If you are recording them also, your decision will be the same. The relevant cost would be incremental cost of an additional scan. Now variable cost per scan is 350. Now 350 is your total variable cost. When you divide it by 0.9, rejection rate 388.89 is computed. Done. Now this one was related with MR10. Now MR59, if you take the variable cost per scan 1,60,000 divided by 2000 hours, when you consider the entire number of hours, sir, from where they have taken this amount, see, no, here given. Running hours are given, this amount is given. So all these values you should divide by 2000, you get this particular thing. Into 1.8 hours, you are going to get your value. Now special technology 137 incremental cost. So total cost has been computed here 299.47. Now when you compare here, then two different costs are there. Your MR1 cost you 388.89, whereas MR59 cost you 299, and that's why machine MR59 should be undertaken. The relevant cost per satisfactory scan are cheaper on machine number MR59, and that's why that machine should be considered for the purpose of your scanning. So one more sum is covered in this RTP. Now if you check this RTP, they have given you wide weightage and wide coverage of this particular chapter. Now various chapter we covered, all these chapters are very important from exam point of view, and even if you're talking about last question of RTP, which is practical in nature, that is budget and budgetary control, this total question is based on calculation of some ratios. Now there are multiple ratios, no, efficiency ratio, then your activity ratio, capacity ratio, calendar ratio, all the details are given. Following information is available for DK and company. The same question is there in textbook of JK Shah classes, chapter number application, question number 5. You can check. Following information is available for DK and company. Standard working hours are given. 9 hours per day, 5 days per week. And if you read the last line, the relevant period is 4 weeks. So 9 hours per day your worker is going to work. He'll be working for 5 days per week, and relevant period is of 4 weeks, means each worker is going to give you 180 productive hours output, 180 hours. Now if 50 employees are going to work with you, there will be 9,000 maximum hours. These are not hours worked. These are the maximum hours can be worked by all the workers. When 50 employees, see how I computed, when 50 employees are working for 9 hours a day, for 5 hours a week, into 4 weeks in a month, then on monthly basis, 9,000 productive hours can be worked if all the workers are working. But actually 40 workers are there. Only 40 workers are there. If 40 workers into 9 hours per day, 5 days a week into 4 weeks, total 7,200 hours will be treated as budgeted hours. This many hours are budgeted because of limited capacity of the employees. Actual hours expected to be worked. Sir, actual hours expected to be worked, the same number which we have computed. The next point says standard hours expected to be earned. This is nothing but your maximum hours. They have given you separately. These are the actual hours worked, and these are the standard hours given in the question. So this is the game of 4 hours: maximum, budgeted, actual, and standard. By using this number of hours, we need to compute few ratios, and for that purpose, they have given you one more important information. The related period is 4 weeks, means according to your budget, if you want to calculate number of days, every week your workers are going to work for 5 days, right? Now 5 days per week. So total 20 days are budgeted, but there was one special holiday. That means actual number of days worked by worker are only 19. There are 20 days available. When you prepared your budget in the beginning period, that time you assumed, you estimated that your workers are going to work for 20 days. But because of one special day holiday due to national event, only 19 days are actually been worked by the worker. Now when question is asking you to calculate some of the ratios, just my first ratio is efficiency ratio. Formula for the same is standard hours upon actual hours. Standard hours are available 7875, actual hours are 6750. When you multiply this by 100, you are going to get your answer. See here, they have computed some hours and now they are giving you the calculation. Second one is the activity ratio. Whenever you are using activity ratio, for that purpose, your formula is to be used is standard hours divided by budgeted hours. Your standard hours are 675. When you divide them by budgeted hours are 7,200, your budgeted capacity is more activity which is performed by the worker is performed above 100%. Calendar. Whenever you are talking about calendar is a comparison of days. You should compare your actual days with your budgeted days. Actual number of days work 19, but budget was prepared for 20 days. That means full calendar capacity is not been utilized by the company. 95% is the answer. Next point says that you should calculate standard capacity usage ratio. Standard capacity. Now formula is pretty clear. If you are using standard capacity, you should use budgeted hours and you should compare them with the maximum hours. My standard hours are 7,200, my maximum hours are 9,000. That means I have worked only for 80%. According to my budget, I should work for 80%. Correct, no? Actual capacity shows actual hours worked by you as compared to the maximum hours. Actual hours are given in the question. They are 6,750 if I am not wrong. When you divide them by 9,000, 6,750 divided by 9,000, you are going to get 75%, means whatever was the total maximum capacity, you prepared budget for 80%, but actually you completed task in 75% only. And finally, actual usage of budgeted is the comparison of actual hours and budgeted hours. My actual hours are 6,750, my budgeted hours are 7,200, means now I am comparing my actual performance with my budgeted capacity, which is 93.75%, and here is my answer. All the answers are calculated. If you revise this RTP thoroughly, definitely it is going to help you for your November 22 examination. There is one theory question also covered with bifurcation and some definitions and all the questions and answers are covered in the suggested part of the RTP. You can refer entire RTP. My personal humble opinion and request to all of you, please solve, don't only check, please solve all the questions in rough. At least you will be getting all the minor calculations with you. And this kind of practice is definitely going to help you to secure maximum marks in the coming examination. So here I'm ending with this session. Hope this session will help you for revising your RTP. Thank you very much. Take care and very all the best for your exams. Thank you.